Knowing when and how to apply for your Social Security benefits can be a critical decision when it comes to planning for retirement. The reality is that the difference between the best method and the second best method of collecting Social Security could mean an extra $100,000 or more in benefits over the course of your lifetime. So it's critical that baby boomers have all the information necessary to determine which filing strategy best fits their unique situation, such as how much can I expect to receive in benefits? When should I apply for Social Security? How can I maximize my benefits? And will Social Security be enough to live on in retirement? I think we all know the answer to that. First, let's start by explaining how Social Security can be the bedrock on which you can build a comfortable retirement. People tend to minimize the value of Social Security benefits, but they can be more valuable than many people realize. First of all, Social Security is one of the few sources of income you can't outlive. In fact, the longer you live, the more you'll earn. If your benefit starts at $2,000 per month and you live 10 or more years, you'll receive over $300,000 in lifetime benefits. If you live 30 years or longer, you'll receive more than $1 million. These totals assume annual cost of living adjustments of 2.8%. Another valuable feature of Social Security is its survivor benefits. If you pass away, your spouse and dependent children can receive benefits based on your work record, like an automatic life insurance policy. When your Social Security benefit is calculated, it's based on how much you earn over your working years and the age at which you apply for benefits. The Social Security Administration considers your annual earnings over your lifetime, indexes them for inflation, and picks the 35 highest years' earnings. The 35 highest years' earnings are then added together and divided by 35 to calculate your averaged indexed monthly earnings, or AIM. If you don't have 35 years of earnings, the missing years will be filled in with zeros and will lower the amount of Social Security benefits that you're eligible for. Next, a formula is applied to your average indexed monthly earnings to determine your primary insurance amount, PIA. This is the amount you'll receive on a monthly basis when you reach full retirement age. If you were born in 1954 or earlier, you will qualify for 100% of your PIA at age 66. If you apply at age 62, you'll only receive 75% of your PIA. The bad news is that once you claim your benefit, that's the benefit you'll receive for the rest of your life. If you were born in 1955 or later, full retirement age will be sometime between 66 and 67. If you wait until after full retirement age to apply, you'll earn delayed credits of 8% for each year you wait. You can't earn any credits after age 70, so it doesn't pay to wait past 70. It might be tempting to start receiving Social Security checks at age 62, but if you can afford to wait until age 70, it could result in the highest lifetime benefit if you and your spouse live a long time. Let's go over a couple of ways you could maximize the benefits you receive. Start by checking your annual Social Security statement to make sure your earnings record is accurate. If you don't have 35 years of earnings or had a few low earning years in your career, you could work a few more years while you're in your peak earnings years to replace the lower earning years with higher earning ones. Another way you can maximize your benefits is to coordinate spousal benefits. The goal is to maximize income for both of you while you're alive and maximize income for the survivor after one of you passes on. Did you know that Social Security benefits can be taxable depending on your total income? You can minimize how much of your Social Security benefits that are taxed by reducing your income, especially investment income. Be aware that municipal bond interest, which is usually tax-free, counts as income when it comes to determining taxes on your benefits. Finally, let's consider if Social Security will be enough to live comfortably throughout retirement. The simple truth is that by itself, it's probably not enough. It's important to consider Social Security in the context of your other retirement resources, including pensions, IRAs, and 401ks. You'll also need to consider IRS-required minimum distributions that you'll have to start taking at age 70 and a half. We've covered a lot of ground today, and you might feel overwhelmed by all the decisions that need to be made, particularly when and how to start taking your Social Security benefits, since these decisions are based on so many different factors. Our clients take comfort in knowing that we specialize and focus our efforts in helping them navigate through the complexities of planning and living in retirement. We understand that everyone's situation is unique, and there's never a one-size-fits-all solution. We encourage you to visit our website to find out about our upcoming Social Security workshops, or give us a call at the number provided, and we'll be happy to schedule a free consultation with one of our advisors so that we can prepare a custom-built Social Security analysis just for you.